In this video, I'll be sharing with you one of Mark Minervini's trading strategy, which is the power play strategy, also known as the high tide flag. But before we begin, if you are new to this channel, my name is Linus, and in this channel, I share all things related to the stock market, so both investing and trading. And if you want more videos such as this, make sure you subscribe to my channel because each week I release new videos about investing, trading, and the stock market. Alright, so let's begin by taking a look at who Mark Minervini is first. So Mark Minervini is a stock market wizard. He's featured in Jack Schwager's best-selling book, Market Wizards. So Mark Minervini is one of the stock market wizards who have achieved a tremendous amount of success in the stock market. So one example of his returns in the stock market is during this period, Mark Minervini managed to achieve 220% returns per year for more than 5 consecutive years straight. And that is a total return of 33,500%. That's a huge amount of returns in just a short period of time. And with the kind of returns that Mark Minervini managed to achieve in the stock market, he managed to turn his account from a few $1,000s to millions of dollars. And in fact, if you take a look at this leaderboard over here, Mark Minervini participated in a real money event called the US Investing Championship. If you take a look at the current standing, so performance through October 31st, 2021, and this is in the Money Manager division. So this division is only for people who have more than $1 million in their account. And if you take a look at this division, Mark Minervini leads the way with 311.9%. So with some of these achievements, we see that Mark Minervini is one of the best stock traders out there in the world currently. And he is someone that we can learn a lot from. So in today's video, we'll be taking a look at one of Mark Minervini's trading strategy. Mark Minervini has a few trading strategies and I cover them in one of my videos over here. But in today's video, we'll be taking a look at a particular strategy that Mark Minervini calls the power play. And the power play is also known as the high tide flag for all you guys who are a bit more experienced in the stock market and also know the terms in trading. So what the power play or high tide flag strategy is that it's a continuation pattern and it's a trading strategy. So what's the benefit of using this power play strategy? So the power play strategy allows us to identify stocks which are exhibiting a lot of strength, so both high velocity and high momentum. And because these stocks are displaying these characteristics, so both high velocity and momentum, if the stock continues to display these characteristics moving forward, we are able to make a decent profit from them. So now that we know what is a power play strategy and why should we use the power play strategy, the next thing that we'll take a look at are the characteristics of a power play and how do we identify them. So these are the 5 main power play criteria. So the first criteria is that the stock must move up more than 100% in price on big volume. The second criteria is that this move up must happen in less than 8 weeks. The third criteria is that this move up in price by the stock must take place in the earlier part of an uptrend. The fourth criteria is that after the stock has moved up by more than 100% and it moves sideways for a while, during this sideways movement, the stock must not correct more than 20 to 25%. And the fifth and final criteria is that during this sideways movement shouldn't take any longer than 6 weeks. So anything below 6 weeks is good, but ideally between 3 to 6 weeks. So those are the 5 criteria. Now I'll go through with you the individual criteria and the reasoning behind them. So for the first and second criteria, so the first criteria is that the stock must move up more than 100% in price on big volume. And the second criteria is that the move up must happen in less than 8 weeks. So the reasoning behind these 2 criteria is because of the strength and momentum. So we want to see a stock move up by more than 100% in price on big volume because this indicates to us that there is strength behind the stock. And this move up should take place in less than 8 weeks because this will indicate to us then that there's both strength and momentum behind the stock. The next thing that we'll take a look at is the third criteria. So for the third criteria, it mentions that it must take place in the earlier part of the uptrend. And the reason why we want to identify stocks which display these power play characteristics during the earlier part of an uptrend is because it provides us a higher probability of success. So if we are able to identify these power play characteristics during the earlier part of an uptrend, this gives us a higher probability of success that our stock will continue to move up from there. This is not to say that these power play characteristics will not work in a later part of an uptrend. It can still work, but the probabilities of success are lower. For the next criteria, when the stock moves sideways, we do not want to see the stock correcting more than 20 to 25%. And the reasoning behind this is because we want to see strength behind the stock. By not correcting more than 20 to 25%, this tells us that there's not much profit taking by the big institutions. And without them taking profits, this indicates that strength in the stock is likely to continue moving forward. And for the next criteria, we want to see the sideways movement ideally lasting between 3 to 6 weeks. And the reason behind this criteria is because we want to see momentum. We do not want to see the stock being idle for too long. So a good time for a stock to remain sideways after moving up by more than 100% is anywhere between 3 to 6 weeks. It's long enough for the stock to pause and recharge before moving back up again. And at the same time, it's not too long until the stock loses its momentum. So here are Mark Minervini's power play criteria again. So the first criteria is that the stock must move up by more than 100% in price on big volume. The second criteria is that this move up must happen in less than 8 weeks. The third criteria is that this power play should ideally take place in the earlier part of an uptrend. The fourth criteria is that after moving up by more than 100% during the sideways movement where the stock recharges and pauses for a while, we don't want to see the stock correct more than 20 to 25%. And for the fifth and final criteria is that during this sideways movement, we want this sideways movement to last anywhere between 3 to 6 weeks ideally. So those are the theory. Now let's take a look at how this power play look like on the stock charts and how they can be used in real life examples. So if we take a look at this first example, this stock is PCYC. Okay, so if you take a look over here at the start of the uptrend, prices were anywhere between $1.50 to $2. And when prices increase over here, it reaches a price level of around $4.50. So from around $1.75 to $4.50, this shows that prices have increased by more than 100%. So that's the first criteria. And if you take a look at the duration of this increase, so prices start the increase from this point over here to this point over here. So it started around December before it reaches over here at the start of January. So prices increased by more than 100% in 6 weeks. So that fulfills the second criteria. And for the third criteria, you can see that the start of an uptrend starts at this point over here. So at this point over here, this was still the early stages of an uptrend. So this fulfills the third criteria. For the fourth criteria, at the peak over here, prices were around $4.50. And when it declines slightly below $4. So the decline over here is less than 20 and 25%. So that fulfills the fourth criteria. And for the fifth criteria, you can see that during this sideways movement, it started at around the start of January and it broke out at around early February. So that's a time period of around 4 weeks. So this meets the fifth criteria whereby the sideways movement is ideally anywhere between 3 to 6 weeks. So you can see how these examples fulfills all of Mark Minervini's power play criteria. And after prices broke out over here, prices increased by more than 90% in just a couple of months. And that is the power of the power play strategy, pun intended. So we'll take a look at another example of a power play situation. So for this case, this is the stock chart for AEHR. This was the start of the move before prices move up over here. So at this price level, prices were at a level of around $2.31. And after moving up over here, we see that at the high, prices were at around $7.83. And that fulfills the first criteria whereby we want to see prices move up by more than 100%. And we take a look at the duration of this move up. This move started at this day over here, which was on the 8th of July. And then it moved up over here, and then it ended at around 21st July. So the more than 100% increase in price took place less than 8 weeks. So that fulfills the second criteria. For the third criteria, we see that over here, prices were moving in a base for quite a while. So this allowed prices to reset and start again from an uptrend. So that meets the third criteria. For the fourth criteria, if we take a look over here, at a price level of around $8, prices decreased to this price level of around $5.20. So the decline over here is slightly more, but we can give it some leeway because this is a lower price stock. So any decrease in price tend to be larger percentage-wise. And we take a look at the next criteria. The start of the sideways movement started on this day on 19 July and it ended over here, which was on the 26th August. So prices moved sideways for about 4 weeks. So this meets the fifth criteria. And we take a look over here. If you bought at this breakout over here, from this price level of around $6.81 to where we are currently at as of the filming of this video, where prices is at around $15.61, you would have more than double your money in just a couple of months. So this is Mark Minervini's power play strategy. In this video, I shared with you what the power play strategy is, the criteria that governs this power play, and some examples of a power play situation. Hopefully you have enjoyed and learned something from this video. If you did, smash that like button because it will really help the channel grow and allow me to produce more content such as this. And if you want more weekly stock ideas and tips, you can join my Facebook and Telegram groups. I included the links down in the description below. I'll see you in the other videos. To your financial success.